Well, BlueScope's job losses have received a lot of media coverage today. I spoke earlier to Chief Executive Paul O'Malley. Paul O'Malley, welcome back to Late Line Business.
Thanks very much.
Now, not a good year for your shareholders. I think the company's about a third of the size it was at the start of the year. The export business, though, has been losing money since before the dollar went beyond parity. Should you have got out earlier?
I think that the export business has really become a significant drain this past 12 months. Certainly we've been looking to mitigate that risk earlier, but it's as the Aussie dollar has settled above parity and the high raw material costs, low steel prices and a softness in the Australian market that it became a series of macroeconomic structural changes that we just couldn't defend against.
Now, you say if markets become more favourable, you can turn the Port Kembla furnace back on. But if you are surrendering export markets, how realistic is this?
Well, the export markets, and this is one of the challenges, are really commodity-based markets. So at some point, if the Australian economy had an Aussie dollar that was back in the 70-cent range, it would be something that you would look at. I don't see that happening in the short term, but if you produce good quality steel, as we have always done, you can always sell it. The problem at the moment, it's at a loss. What's important at the moment is that the restructure we've announced today will see a $225 million improvement in our earnings once the restructure is completed. And that's important because it gets us back on a positive footing, but it's also very good news for the shareholders. A very tough day, though, for our employees and the Illawarra and Western Port communities in particular.
Is the union on side with these job redundancies? Because presumably, if not, it's going to lead to more costs.
This is a decision that we have only taken with lots of due diligence, lots of analysis, and certainly our board has been very engaged in the process. I think the unions and our employees understand the challenges. What we have to do is ensure that we treat all of our employees with respect, that we will absolutely pay all of the provisions and redundancy payments necessary. And I think that we'll have the support of our workforce to the extent that we treat everyone with respect.
You say a carbon tax had no impact on your decision to exit the export business, and in return the government is allowing BlueScope to draw on funds from its carbon tax package. You haven't been sweet-talked by the government to take this position, have you?
We've had a very robust engagement with the government through the carbon tax engagement. We said from day one that there needed to be a sectoral solution, and I think with the Steel Transformation Plan, that's what we achieved. We've also engaged with the government around the macroeconomic factors, and I think it's been as a result of that constructive engagement that the government has said that to the extent that you need to draw on those funds earlier, they will be made available. I don't think at this stage that that will be necessary, but I think it reflects that there is an understanding that manufacturing in Australia is doing it really tough, and it's important that there are policies in place not only for the steelmaking industry but for all of Australian manufacturing that reflect those realities.
Heather Ridout was talking about these realities earlier today, and she feels that the government should have done much more in the May budget, that the trickle-down just hasn't happened.
I'm not going to talk necessarily to the budget. I think the key thing is moving forward. We absolutely need to ensure that red tape, bureaucracy, efficiency across the entire economy, improvements in infrastructure. I think there's a tremendous opportunity to improve our physical infrastructure. They're all things that I think need to be talked about and funded. So for budgets going forward, whether federal or state, that has to be a focus.
You're now focused on the domestic market, but where's the demand going to come from? We've got a weak building sector, and now concerning reports actually that a lot of imports are happening in the mining sector on the infrastructure side.
Oh, look, there's still, actually, I was surprised that we still dispatched over 1 million tonnes this past 6 months. 6 months ago, at our half-year results, we dispatched 1 million tonnes, and I saw the economy souring. I saw confidence going down, and we actually dispatched the same amount of steel. So there's still a robust undercurrent of demand in Australia, but there is no doubt that an increasing amount of the investment in the mining boom is prefabricated product coming in from overseas. We've got to do what we can to address that, but the Australian economy is still a large and productive economy, but on the margin, yes, we are 10% off last year's volumes. I think that when people are less concerned about interest rates rising, if the Aussie dollar comes off a bit, we should then start to see a little bit more reinvestment in this economy.
Interesting for investors to watch the different strategies of One Steel and BlueScope play out. Now, One Steel has gone into iron ore and vertical integration, and even their latest asset buy, $350 million today. Do you regret not going down a similar route?
Oh, I think from the benefit of hindsight, One Steel was spun out of BHP with iron ore mines. When BlueScope came out of BHP, there was a tremendous desire by those in BlueScope to bring the Illawarra collieries with them. We lost that debate at the time. So certainly we have to do something to reduce our raw material costs structurally going forward, but we don't want to buy mines at the top of the market.
Analysts back in February were muttering about the benefits of a merger between One Steel and BlueScope, the synergies there. Is there really no talk at all about this?
I think it's very hard to find out in this environment where both companies have taken so much costs out to determine that there are a lot of synergies. In fact, there may well be dis-synergies. We've got a duty to do the right thing by our shareholders, and at the moment, this restructuring is the most value-added project that we could pursue. It's very tough on our communities in the Illawarra and Western Port, but for those who remain with our business, it will be a more profitable business, and that's important.
Paul O'Malley, a painful time at BlueScope, but thank you very much for joining us today.
Thanks for your time, Tikki.